Mm.
We'll just wait a few more minutes for some more people to join, but I just want to thank everybody for hopping on here.
Hey, Kurt.
Oh, I'm sorry, I'm on mute. Hey, how's it going?
Good. How are you?
I'm doing well. It's been a while.
It has. It has.
Thanks for taking some time to hop on here.
Are you still in Maryland?
Yeah, I'm back in Maryland. I'm back outside of Frederick now. So I was over on the Eastern Shore for a while, and then I moved back to Mount Airy and been up here since I guess about 5 years now. So
Oh, wow.
yeah, actually, I met both Mike Fuller and Duncan towards the end of the summer, and went out for drinks with them to talk about the old times with you know back in the day with Axiom, all of our war stories.
Yeah, I saw Duncan a few weeks ago um at Peggy Hunt's retirement gig.
Oh, really?
Yeah,
Wow.
I hadn't seen him in years.
So she actually decided to retire finally, huh?
Yeah, yep, finally.
Wow. So are you still down in Virginia Beach, Dave?
Yep.
Wow. You've been there quite a while.
Yeah, over 20 years now.
Man, it's hard to believe we're getting that old.
Yeah, well,
I
it is
know.
what it is.
Yes, it is. Just glad we haven't gotten any older.
Yeah. Yeah, okay.
I look at my kids. I'm like, how do I have kids old enough to be this age?
Yeah, how old are your kids now?
Well, my oldest son Nick, he's 31. My son Eric is
Oh,
going to be
wow.
30 next week, and my daughter's 27. And then I have grandkids. I've got a grandson who's going to be 13, a granddaughter who's going to be 7, and then another granddaughter who's almost 2. So
Wow.
crazy.
Mm.
What's the age of your kids now?
They are 15 and 17.
Jeez, mm, nuts.
Yep.
All righty. I think we have a group here. I want to be conscientious of everybody's time, so I will go ahead and get started if that's okay. One thing, just like I was sharing, I just wanted to thank each of you for taking some time out to hopping on here. One of the things I got there's been a message posted up and social media and message out to a lot of people, but thank you for taking the time to do this. One thing I wanted to share is kind of go over, I'm not sure how many people know kind of what my history is, whatever, or kind of how I evolved to where I am now. But, I think when I was talking to Dave and I worked together for many, many years. I worked in healthcare and healthcare reporting, healthcare analytics for many, many years. Did that for a long time, did as a consultant, and then worked for multiple health insurance companies, and just kind of got bounced around, and was working for a health insurance company here in Baltimore. As many people know, just kind of how the world goes, that health insurance company got acquired by one of the much larger health insurance companies. I was told those things: don't worry, your job's safe, nothing to worry about. Yeah. So anyways, was with that company for a while, made the transition to the new company. And then one Tuesday morning, I got that phone call that nobody wants to get, basically that told me that I was out of work. So here I was in my mid 50s at the time. I was explaining about my kids. I had two kids in college, a mortgage. I didn't have a plan B. I was out of work. And, just kind of, it was very, very tough. This was prior to COVID, but it was kind of a challenge. I will say that now I did start working in financial services as a part-time thing at the time. It was something I enjoyed doing at the time, but I got re-employed back in healthcare, worked for a very small startup company a friend of mine had. Then COVID hit. I got laid off from that job. Got started back in healthcare again. Worked for that for a year and a half for a company out in the Bay Area of California. Got laid off for that. So I decided, kind of maybe the corporate world wasn't what it used to be. So I started doing financial service on a full-time basis. To be honest, I've been doing it about a year and a half. I love the flexibility. One thing probably a lot of people don't know, I do care for my parents. I'm an only child. My dad's 95, mom's 88. And by doing this position, it really helps me get the flexibility that I can to take care of them. So, if they need a doctor's appointment, I can go do that. But most importantly, I really like helping people. And, one thing I know about, even though I was making very good money all those years, I didn't really know anything about money. And one thing I wasn't really taught it. I wasn't taught it in school. And, to be honest, along the way, I made a lot of mistakes. I wish I could go back and undo some of those. But one of the things I'm passionate about now is going out and talking to people and see if I can help them and kind of make their lives better. Plus I got the flexibility of this. So I just wanted to hop on here, to just kind of share a few of the things that I've learned over the years and see if we can teach the people and see if this kind of makes sense to people. I will tell you up front, there's nothing to buy. There's not a sales pitch. We're not going to recruit you. There's nothing like that. It's just, I just want to share some information of things that I've learned, and maybe we can educate some other people along the way. One thing I also did want to share, I think when I posted this, I said I do have a free gift for everyone who attends tonight. So if in the chat, or if you could do that, if you could put your name and send me your email address, I will send that gift out to you in a couple of days. I have to get the final preparations on it. It's actually a booklet I've just in the process of wrapping up writing, and hopefully I will find some value in that. But I just wanted to share that. I just want to send that out because I do appreciate your time and all that. I've got people on here who I work with now. I've got people I worked with. I think Dave, who I was talking to before. I don't think I've seen Dave for probably about 20 years, to be honest. So it's been quite a while, but those, that's the thing about these friendships that we build, and I appreciate everybody's time for hopping on here. So anyways, just kind of go, I do have a colleague who's going to do the presentation. His name is Bill Corbett. He actually runs the financial agency I'm part of. Just to give you a little background about Bill, Bill and I actually met at church probably about 10 years ago, and very, 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 very religious person. He's a serial entrepreneur, married with 4 children, very, very busy. He's actually a retired U.S. Navy corpsman. He also has worked at the U.S. Naval Academy in the healthcare department there. And I got connected with Bill because when I was out of work one time, he asked me how things were going and said he had just started in financial services, wanted to know if I was interested. I told him no. I said, I'm a computer guy. Why want to do financial services? But, I kind of kept my mind over and started doing it, and then really enjoyed it. And really, like I said, really enjoyed helping people. And that's kind of what I'm doing. So, one of the things I want to do is I want to pass it over to Bill to let Bill to tell you a little bit more. And then, we'll kind of open up the end for questions. We want this to be interactive and informational. So if you have questions along the way, please go ahead and ask questions along the way. So anyways, I will pass this over to Bill. If you want to take it from there, Bill.
Absolutely, brother. Can you hear me?
Yep, got it.
All right, awesome. Well, welcome everybody. It's let's see, we got 7:38 East Coast time. I know we got people on here from all over the different parts of the country. See a couple people from I think California, somebody checked in, all over the country. So welcome. And so tonight is my extreme honor and privilege to share a little bit with you about our company, what we do, what Kurt's doing here. I think you'll understand by the time I get done why he decided to make a shift and to come work with us and to be part of our crusade and what we do here and not go back to corporate America. And so a little bit, I'll share a little bit of my background. You'll understand why I made the decision as well. And I'm going to share with you tonight how we've been able to help just under 1 million middle-class families since 2009 when our parent company, we're partnered with. I'll explain that partnership there. And we've actually have how we've been able to change the entire function of how financial services is done across the country. So coast to coast, the United States and Puerto Rico, we've completely changed it. I'll share a little bit about that as well. And I'm gonna also share with you why we've been endorsed by, let's see, I'll just give you a couple lists of names. As soon as I share the PowerPoint, I got a couple slides to share with you as well. I think you'll understand why people seek us out every single day to help them, educate them with their money, finances, help them get out of debt, help them plan properly for the future, how to build tax retirement. So we've been endorsed by Kevin Hart, the #1 comedian in the world, Magic Johnson, the late great Kobe Bryant, President Bush, the former Secretary of Defense, who I had the privilege of not only meeting, but working for and working with throughout his career. Then he went on to become the Secretary of Defense and came here and saw what we did as a company and endorsed us. And let's see, we've got Tim Tebow and a whole list of, there's actually, I have the slides, I think there's 7 slides of all the people that have endorsed our company and what we do. But I think you'll get the hint as to why and how that is all played out as I go through and share the journey here. So just a little bit of quick background on me growing up. I'll go through this real quick. So back for me, I was born first generation of my family born in America. My dad's an immigrant. My grandparents are immigrants. They came over during the Holocaust. They were actually in a concentration camp and they escaped through the underground that they actually helped build. And so came here with the clothes on their back. They lived in the ghettos in New York City, and through determination, hard work, my grandmother spoke 6 languages. She worked for the State Department for a while, translating documents. My grandfather actually swept some streets outside a butcher shop in New York City, put a little bit of money together, moved to a farm in New Jersey, and then eventually they bought the farm. And then from there, they rebuilt everything that Hitler took away from them in Poland. And so they rebuilt everything here. My grandfather had been an indentured servant and worked up to owning jewelry stores and helping everybody in his communities there with those kind of things. And then he had to start all over again. So he started to become a farmer. And so on the farm, he learned how to farm. And eventually, after about 9 years here in America, they, with, again, determination, their faith in God and the hard work and determination, they became multimillionaires. But growing up, my mom thought success was being a doctor. So on my mom's side of the family, and my dad's too, but there are a lot more entrepreneurs on that side, they thought success was we have a lot of doctors and attorneys in our family. So my mom used to introduce me as, this is my son Billy. He's going to be a doctor, and so that's what I grew up with. That was my calling in life, to go on to college and medical school, become a doctor. So I did eventually get my education done. But what happened was my parents got a divorce. My mom and my stepdad couldn't afford college or medical school for sure, and so instead of going to debt like everybody else that I knew my family had done, unless their parents paid for them, I decided to go into the United States military. So I went into the United States Navy, and I said, well, if I'm going to go and become a doctor, why don't I get some experience? So I went in the medical field, quickly realized that I love taking care of people. I love helping people. I love people in general. But I realized that I didn't want to go back to school for 14 years and go on to that route. So I became an independent duty corpsman and went on to become a lab tech and all kinds of stuff. I spent 20 years in the military. I met my lady, I call my ride or die chick, my wife. We've been together for 29 years, married 26. We have 4 amazing children. 3 out of 4 of them work with us in some capacity in our facet in our business. And our youngest one is he's about to graduate high school this year and move on to his journey. So what he wants to do. So and then what happened throughout the journey, and then I'll wrap it into how we got started here. So just like most middle-class families, most enlisted people in the military, we lived paycheck to paycheck for a long time. I always had a second job, a third job. I started multiple businesses. Before my wife and I got married, I owned a gym. I started out as an entrepreneur while I was in the military, opened up a gym and with a business partner. That went well for about 3 years. Found he was embezzling for the company, got out of that. And then the journey continued. I got married, had kids. Those of you who all know the story about, especially today, trying to raise a family today with this inflation and all the things that are going on. So we lived paycheck to paycheck. Then I got this great idea that I was going to. My brother-in-law introduced me to a company, and that's where I learned more of the power of entrepreneurship, what you can do with leverage and all that kind of stuff. We built a business in 4 different countries, and that all fell apart. And then we decided alongside that, we were building a real estate portfolio. So every time we went somewhere, we would transfer the military, would buy a house, we turn it into a rental. Then we said, man, this credit's really cheap and I can get a loan for anything. So we kept buying another one. And then the recession happened, 08, 09, and we literally lost everything. Everything imploded, filed bankruptcy in 2010 and started over from scratch for everything. Then it was right before I went to bankruptcy court. A buddy of mine called me, and this is what he said. He said, hey, I'm going to pray for you, brother. I know you're going to bankruptcy court tomorrow, because I just read an article that Warren Buffett only lost 3% of his wealth in the recession. I said, all right, didn't think anything of it. After coming out of bankruptcy court that day, I said, you know what? I don't understand what I did wrong or what all of these good people did wrong, but there's some people in the world like Warren Buffett's who know things that we don't know. And I'm sick and tired of middle-class America and people like me and my family and my grandparents were robbed of millions of dollars, taken advantage of by financial advisors, financial planners, so-called experts. And I said, you know what? I'm sick and tired of this nonsense. And I said, so I went to that day to Barnes & Noble, bought every book I can find on Warren Buffett, what he knew, people that wrote books about him. And I started to study it, and we started to change things and rebuild things. And my goal is to start helping people consulting. And then out of nowhere, with obviously prayer, not out of nowhere, but I was praying and saying, God, where are you calling us? What is this? Where am I supposed to go? And so I retired from the military, went to work for the government, and was doing this education and teaching. And in 2018, out of nowhere, somebody contacted me on LinkedIn. And the guy said very simply, he said, hey, I see you're an entrepreneur. I see you're a veteran. And I see you follow my CEO. So I said, okay, who's your CEO? And he said, Patrick Bet-David. I said, wait a minute, you mean the guy from Valuetainment? He goes, yeah. He also has started a company called People Helping People Agency, PHP Agency. I said, okay, interesting. Didn't know anything about it. I was following Patrick on YouTube for 4 years. Had no idea. I knew he was in financial services. That part I knew, but I had no idea of his company. Wasn't interested at all. So long story short, he introduced me, sent me, followed up, sent me a video. And I said, you know what? I know God was asking you for some guidance and discernment. Maybe this is it. And so what we did is my wife and I, we were about to buy some franchises, 2 of them, and borrow 1.5 million. And we put that on hold. And I said, let's put it on hold for 6 months. Let's see what we can do here. And here's what we did. In 15 months, after coming to this company, working this business part-time, like at the beginning, super part-time, we were generating double the income part-time than we were making full-time combining our jobs. And I was a GS-15 in the government, and my wife worked at Cheesecake Factory. So we made decent money, but we made double the amount of money part-time here. So you know what we did? 2019 says, see you later, donated the jobs. And so tonight, what I want to do is just briefly share with you how all that came together, what we do, how we've been have the impact, how we've been since 2009, we've created the most diverse financial services company in the world. Our goal when we set out, or actually our CEO's vision, the founder's vision, Patrick Bet-David, his vision was to increase diversity in the financial services space. We didn't just, we set out to do that, become the most diverse in the United States, but we found out it's now been almost 5 months that we're the most diverse in the world. And so we're excited to share that with you and what we do here and what Kurt's doing and all that kind of cool stuff with you guys. So give me 1 second. I'm going to share all my screens here and we will jump into it. All right. right, here we go. All right, as I mentioned earlier, the name of our company that we partner with is called People Helping People Agency, PHP Agency. If you look at this logo here, it's actually the hand of God reaching down to Adam. You see Built for Life Financial Agency at the top. That's the company my wife and I built starting back in 2018. And I'll share it here at the end, how that all works and how that comes together. If anybody's interested in, working with us or learning more about that, we can definitely share that with you here at the end. But so we solved, when we set out in 2009, we set out to solve two problems. Number one, we knew that middle-class America needed a change, right? We knew that the traditional way of advising the way financial planners, financial advisors do things, we were seeing the data that says it's not working. All right, it's not working, right? It just, the way middle-class America is taught about money and finance just isn't working. So we set out, the first crusade was to provide free financial education to middle-class America. So basically provide financial literacy. We did that. Not only do we do it, we set out to change the whole paradigm of the industry. We're going to sit down with you and educate you on money and finance, the Warren Buffett strategies, the Oprah, the Bill Gates, those kind of strategies, not the strategies that have been taught by financial advisors, the ones that are promulgated by people like Dave Ramsey. Love the guy, taught his program for 13 years, but he's just clueless when it comes to building real wealth. And so Susie Orman. I've got all the data, facts. Everybody's ever tried to debate me on that, they lose. Because it's not my strategy. It's, if you were going to want to build wealth in America, it would absolutely 100% make sense to follow the strategies of billionaires rather than someone who is just a millionaire. It just can't, just 100% makes sense. And so what we've done over time is we've been able to take those strategies, make sense of it, and teach it to middle-class America so it makes sense to everybody. And what I'm about to share with you, a couple of slides forward, the 3 ways money grows and the 5 ones of money, not only do we use that to teach our clients, but this is exact 2 same slides that we teach elementary, middle school, and high school kids these financial principles, using the same 2 exact slides. And obviously, we use different language and we play games, all that kind of stuff, just different things. So we solved 2 problems. Number 1, financial literacy. Number 2, we set out to bring diversity to the industry. In 2009, companies, I'm going to throw a couple of our partners companies up on here. Some of these names are household names. You've seen them for years. Some of them have been around 137 years, 107 years, 127 years. Some of these companies all these companies are partners. The one issue they were dealing with in 2009 was this cartoon, what the cartoon represents. The average agent in financial services, specifically in life insurance, which is the subset of the financial services industry. In the life insurance industry, the average agent at that time was a 61-year-old white male. Nothing wrong being 61, white or male, but here's the reality. This industry of life insurance that we're in is the 2nd highest paid industry in the United States behind professional sports, right? And this was a hard thing for my mom to swallow when I told her about this, because she was dead set that success was being a doctor. I love doctors. I have massive respect for them. I actually recruited a couple hundred of them when I was in Navy medicine and worked for the Defense Health Agency. And I had thousands of them eventually in my other job that worked for me. Love doctors, love the medical field, absolutely love it. They're unsung heroes every single day. But when it comes to understand money, wealth, and finance in the United States, the 2nd highest paid industry is life insurance, behind professional sports. So let's go back to this gentleman. So here's what happened. If you've made millions and millions and millions of dollars in your career, and now you're in your 60s, how many days do you think you go to the office? Well, we all know the answer to that. The answer is probably none. I mean, you may never even go back to the office. Some of the individuals in our industry retire in their 40s, completely financially retired, financially free in their 40s, starting out in their 20s, and less than 20 years or less, they're done. So these gentlemen were obviously not going to the office. They were not coming up with innovative campaigns to reach all of us in what was becoming diverse middle-class America. And so the industry was going like this. So we stepped on the scene in 2009 and said, hey, we have an idea, we can solve this. We went out to all the cross-section of middle-class America and say, would you like to learn about the 2nd highest paid industry behind professional sports? And obviously everybody that we talked to, not everybody, but a large chunk of them said yes. So we solved the distribution process, the distribution problem of reaching middle-class America for a $16 trillion industry. So imagine if you solve the problem for $1 billion company, they'd probably pay you a lot of money. But imagine solving a problem for an entire industry that's totals over $16 trillion. So that's us. So we reach Gen X's, Gen Z's, millennials, minorities, immigrants, military veterans, women, all cross-section of all middle-class America. And the genius behind it is this guy, the CEO and founder of People Helping People Agency, Mr. Patrick Bet-David. I'm truly blessed to say he's one of my good friends, one of my coaches and mentors, my advisors, and an absolute confidant in my life. Truly blessed to have met him in 2018. He literally changed my life and changed the legacy and of the last name of my last name, Corman. The picture right here is a picture of the MGM Grand, which we've been back to many times, but this one was actually in the middle of the pandemic. And so what happened was we were planning to host our event. We spent 5 months planning it. Scientists, doctors, all these event planners. We believe we had a rock solid plan to make it and pull it off safely. And we were told it was going to be canceled. And Patrick pleaded with them, the state of Nevada, and the MGM Grand, and said, let us do it. They said no. And then he said, well, what if we sue you? And then guess what happened? They said, well, let's take a look at your plan. And they backed down and they let us host our event. And today we're called the company that opened back up Las Vegas, because we proved that we could go in there. The media was going nuts. So like, how can you guys do this? How can you be here? And all this kind of stuff. And we are known today as the company that opened back up Las Vegas. So we're very proud of that. And what we've created since then. So this was 10,800 agents that came together. Obviously not everybody, but today we represent over 41,000 licensed agents across the country. Many companies talk quite a bit about diversity, right? Today, especially it's like a talking point buzzword for a lot of companies. This is 100% about who we are, our culture, what we do, and the number one reason we've been able to impact so many middle-class families and change the direction of their families, the course of direction of their families, is because of our diversity. So there ain't, as the ladies that are on here, how about this? 53% of our company is women. That's so I'll put in perspective. So that we're number one by a mile. Number two is somewhere around, I think the latest stat was they were about 20.6%. So they're not even playing the same game as us. And so our race and ethnicity breakdown, you can see over here on the left, we look like the exact opposite of companies that think they're our competition. Like, New York Life, Pacific Life, and, these are great companies. I mean, amazing companies. We had, let's say, you've got Morgan Stanley, Edward Jones, First Command Financial, all these companies, they're great companies, absolutely great. But the one thing they can't compete with us on is the diversity side. And that's one thing that, again, has been a game changer. So if you look at these pictures here, these are some of our senior vice presidents and above in our company. Obviously, we represent the cross-section of middle-class America. What I'm going to do is I'm not going to bore you going through all 7 slides of these endorsements. I think you get the picture. When you see from former NBA stars to you see former presidents, former Secretary of Defense, people like Nicky Jam, Pitbull, Tim Tebow, Shaquille O'Neal just endorsed this last year. When you see that, you realize that this company here that we're talking about tonight must have done something, and we're currently doing some amazing things to receive all these endorsements. And so we're very, very proud of that. So just a quick summary of what I just went over. We solve distribution for a $16 trillion industry. We provide financial literacy, so we're able to help all of us in middle-class America. And we believe we've created the #1 entrepreneur opportunity on the planet. And as the data keeps coming in month after month, quarter after quarter, the data proves that. So again, I love math and science. I was supposed to be a doctor, so I love math and science. And we always say that, we have the evidence, it's irrefutable. Okay, so now because you guys are guests on here, I know Kurt's got an amazing gift for you guys for coming out and checking out what we do tonight. You're going to be blown away when you get that gift and you unpack it and start drilling down through it. It's going to blow your mind. But because you're a guest here tonight, what I want to do is quickly explain to you, if you're one of our clients, so how do we provide this free education? Like, what do we do? Like, we do some magic trick, or go through somebody's budget and cut it up like Edward Scissorhands. No, what we do is we do go over people's budget and we do help them with their money. But the way that we provide the education is we decided to take what Warren Buffett, Oprah, Bill Gates, Mark Cuban, Jeff Bezos, Elon Musk, the strategies that they use, the strategy that's on the screen right now. Warren Buffett's been talking about this for 51 years as of this year. And he says, if you want to build wealth in America, you need a three-legged stool. Okay, you need fixed strategies, you need variable strategies, you need index. So this is how we explain it to everybody across middle-class America. And just under 1 million people have said, that's amazing. Can you tell me more? And can you help me? So we've done pretty well. So fixed strategies, these are offered by your banks. This is your savings account, your checking account, your money markets. We like those type of accounts because they're safe. Now, we know the downside to that. I saw some people shaking their head. I know the downside to that is the fact that you don't make a lot of money there, right? 0 to 1% has been the average over the last 30 years. Today, obviously, interest rates are up, so you can get a better return. But historically, you're going to be somewhere around this area here. But again, the reason that this is so important is because we call this the Murphy Fund, right? Most of us in middle-class America, if Murphy shows up, sometimes Murphy shows up, knocks on the door. Sometimes Murphy comes to dinner. Sometimes Murphy takes up a room in the house. Here's what we've realized, that middle-class America, when Murphy shows up, guess what normally happens? We have to borrow to charge it, right? So that's fixed strategy. So we make sure that our clients have 3 to 6 months worth of their money here. Then we need to mix in some variable strategies. This we all know as well. This is your 401ks, IRAs, mutual funds, stocks, crypto, real estate, gold and silver, all those things that go up and down. We like those things because there are times when they grow extremely well. We also know that money in those type of strategies, you have to risk, right? There's some risk involved. Depending on how risky it is, you can lose some or all your money. So it looks like this over time. Up, down, up, down. Warren Buffett has been famous for saying that if you want to be an investor, you have to understand that sometimes you're the bug, sometimes you're the windshield. Just the way it is, right? Look at back to 0809 when 401ks became 201ks. And guess what? The data is saying that we're in a recession right now. And this recession, there are now 7 economists that are predicting that this recession is actually not could be, but is going to be worse than 0809. I don't know. I don't have a crystal ball. I study the data as well, but I'm just sharing that with you. So here's what we've learned. That from that amazing dude, Mr. Warren Buffett, who's worth I think he's worth 108 billion as of a couple of weeks ago. Here's what he said. The problem with middle-class America, here's the problem. This is where the journey ends, right? Most of us have no idea that there's a third leg that we should have, a third piece of the puzzle, or a third ingredient to pouring your financial concrete. And so that third ingredient is indexing, right? Index strategy. So Warren Buffett says if you mix in indexing strategies in a strategy where you can grow money tax-free but not lose it, aka life insurance, right? It's a special type of life insurance product that was created to build tax-free wealth. It's called Index Universal Life, right? Many wealthy people started out investing in whole life. And then when indexing became available and it was able to be utilized inside a life insurance policy, guess what everybody switched to? Indexed Universal Life. So here's how it works. Number one is it's safe. You can't lose any money. The insurance company takes the risk. And you get to earn money based on a return of the index, again, based on the index performance. And you can earn that money one of 2 ways. You can select a cap strategy where there's no spread you have to cover, or you can select an uncapped strategy where most years there's a spread, and whatever the index makes over the spread is all yours. You get to keep all of it. Okay, if the index does 30%, the spread's 4, you earn 26% interest. So let's talk about cap because it's the easiest one to understand. Imagine you're sitting in a room, you have a floor that your feet are on is 0, can't go below 0, and you have a ceiling, right? So your ceiling, let's say, is 9. So let's say the index comes around and the index makes 20%. Well, if you're capped at 9, that means you would earn 9%, right? Makes sense. If it does 8%, it's under the cap, so you would get all 8. But if it drops 38%, like we saw at the beginning of the pandemic, you would actually lose 0. You have a floor of 0 up to 9. So imagine growing your money and for the rest of your life like this. Every time the market, aka the index, goes up, you make money when it's credit at the end of the year. And if the market goes down, you sit flat at 0. And what if I told you that all the money you earn in here grows tax-free, not tax-deferred, not tax-advantaged, tax-free, and you get to take it out tax-free? What if I also told you that all the money you earn in here can never be touched in bankruptcy, divorce, or being sued? I wish I'd have known that in 2010 before I went through my bankruptcy, but I didn't. Why? Because I had a financial advisor that was teaching me the same exact strategies that his company taught him and taught hundreds of thousands of other clients, and everybody got whacked in the recession. So we got killed, a bunch of millions of other people got killed financially. And so, but there's a group of people called the rich and the wealthy. Most of them didn't, because they understood these principles. And so we teach it to our clients, they're blown away. Now, why does this work so well? Well, the reason it works so well is because it invokes something called principal protection. And here's how principal protection works. Warren Buffett in 2010 was being interviewed, and he was explaining the 3 ways money grows to the lady who was interviewing him on the show. And he explained this, and she still didn't get it after almost an hour. So he said, stop the interview, put his hands up, and he said, he goes, we're going to play a game together. And so he explained this to her credit. He didn't have a slide. He wasn't showing it on a PowerPoint. He was explaining it. And she still didn't get it. So he said, stop the interview. He said, let's play a game. He reached into his pocket and he pulls out a wad of cash and gives her a $100 bill. He said, I'm feeling generous today. You can keep the 100. And he says, here's how the game works. You got to put this 100 into something variable. Okay. So she said, okay, I'll put it in my mutual fund. He said, okay, I got some bad news for you. The stock market dropped 50% today. She said, well, that was quick. And he goes, yeah, how much do you have left? Well, after a couple of seconds of hesitating, obviously we all know it's $50. He said, but, I can see you're upset. Don't get upset with me. I got some great news. Tomorrow, the stock market's going right back up 50%. And now without even him even had to ask, hesitate, she goes, oh, that's awesome. I'm back to 100. And you would have thought his eyes would have come out of his head. It almost looked like it did on the interview. And he said, excuse me? He said, what did you say? She goes, that's great. I mean, 50 cancel off 50. I'm back to 100. He goes, no, it doesn't. And she goes, what do you mean? He goes, let's do the math together. He said, today your account opened up with $50 and the market went up 50%. How much do you have? She goes, oh, okay. I'm only at 75. He said, exactly. And the reason he shared that is he says, because at that point in 2010, and even today, even with the requirements for full disclosures on mutual funds and other products, most of us have no clue that we even pay fees, right? Tony Robbins has an incredible book. He's on this massive campaign across the country to help educate middle-class America through his platform about the ridiculous amount of fees that are involved in 401ks and some other products out there. But here's what she was taught as a financial advisor, right? If you look at a perspective, they always tell you, don't worry about the dips, just average the peaks. All you have to do is just average the peaks. That's okay when the dips only last a month, a week, 6 weeks. But when they last like the Great Recession, where it took almost 10 years, we call it a lost decade, to recover from that
loss,
guess what happens? We start to ask some questions, or at least we should be asking questions. Well, guess what we do? We make sure this doesn't happen to our clients. We teach, we educate them, we help them understand the fundamental principles of building wealth, the way Bill Gates does it, Warren Buffett, etc. And then what we do is, now that we've taught them the 3 homes of money, and I'm just going to click through this so you guys can see it's pretty simple. Now that we've taught them, our clients, the 3 ways to grow money, we just did a simple chart comparison of putting the 5 homes that you can put your money in side by side and compare them. And how do we score them? On the same 5 categories that every financial product is scored on. Liquidity, how quickly can you get it out? Safety, is it at risk, or can you have some protections? Is there any tax benefits, deductible today, or is it tax advantage in the future? And how does it grow? And if you look at this chart here real quick, you see very clearly that our new friend, life insurance, the Index Universal Life, beats them all. It's pretty simple. So again, just a quick recap. Index Universal Life was designed to build tax-free wealth. So it is life insurance. Think about life insurance like an umbrella. It does come with a death benefit. This particular type of life insurance, though, this umbrella can be adjusted. So the way life insurance should work is that you need a bigger umbrella when you're younger and you have a lot of risk and everybody's counting on you to make money. Then as you build wealth, you should be able to shrink that umbrella. And then this policy also has something called living benefits. What's that? What if you had a heart attack, stroke, cancer, major burns, disease of any organ, and I told you that that same policy, you can access your death benefit while you're still alive? That's called living benefits. And then there's that tax free account that's inside of that policy that's growing based on how the index performs with a zero floor. And you either have a capped or uncapped strategy for growing your wealth. So this is it. This is what we do every day. This is what Kurt's doing. We go out and we teach our clients every single day about this. It blows their mind. And not only did they want to do business with us, we average I think right now we're at 5.6 referrals per client. Because why? We invest time, we educate, we answer questions, we educate, we go through scenarios, we educate, and then our clients know exactly who they are, what they have, why they have it, and then guess what? They refer everybody they know to us. So again, the questions we get asked all the time is why, what's going on? Like I go to the grocery store, I go to the gas station, I'm looking at my budget, I'm making more money than I ever made in my life, but why does it seem like I can't catch up? Well, here you go. We went to the Economic Policy Institute and we said, give me numbers from 1990 to 2021. And let's look at a couple things that we see just about on every person's budget that has a family. So they got college debt, usually. They want to buy a home. So they have a home, mortgage debt. They're putting gas in their car, unless they have a plug-in, and they have some kids. So they're raising kids. By the way, this number is 0 to 18. So if your kid's staying at home after 18, increase the number. And what if you want to buy a car to get to work? So what would the cost of a new car? And you see the difference between those two from 1990 to 2021. Some things have gone up over 300%. And that's okay. It's okay. It's okay. As long as this number down here keeps up. Well, you can clearly see it hasn't. So how are we doing this today? How do we afford all this stuff? A lot of debt. So guess what? One of the things we do, we help our clients get out of debt, right? If they have credit card debt, unsecured debt, we have a company that can help them, A-rated with a Better Business Bureau. They're specialists in helping them work with the creditors and get out of that debt. But not only that, we're working with them to make sure they understand the concept so they don't go back there. That's one of the things we provide, okay? We got 3 enemies of our money that we deal with every single day. Number one is taxes. You can't control that. Well, you can, but here's one fact, okay? No matter where you stand politically, math is math. Okay, if you go to usdebtclock.org, 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 if you go to that website, you'll see this wheel and all these numbers spinning, like literally faster than you can even comprehend them. That's the US debt. And so the only way for the country to make money is they have to tax us, right? Government just can't poof, right? They have to tax us to bring in revenue. And so one thing we know 100% for sure is that we're in one of the lowest tax rates we've ever seen in the history of our country right now, and they are going up 100%. They're going up, and there's no way unless our country becomes completely insolvent that they cannot raise taxes. They have to. And I did a national webinar. We had 1,400 people, and I asked to put in the chat, and I said, "What's the highest taxes, income taxes, ever been in the history of our country?" And one guy got close, or one lady actually almost nailed it. She said 92%, it's actually 94. So if taxes have been at one point 94, and a lot of politicians are attorneys, and attorneys' job is to find precedents to argue a case, do they have precedents to raise taxes all the way to 94%? Yeah, it's been done before. So taxes are going to go up. So how do you do that? Well, the way the wealthy do it, they created strategies to build tax-free wealth. We teach our clients to do that every single day. Then you got obviously inflation. We just saw the chart of how bad that is. You can't control that, but what if there was a tool that was guaranteed to outpace inflation? Every single year throughout the history, it's always beat inflation and made, in some cases, 50 to 100 times whatever the inflation rate was. But the one thing we can't help a client with is this one in the middle, procrastination. So one of the things we teach clients to do is that if this makes sense to you, let's get started today. And you know what they usually say to us? Of course, it makes sense, and let's do it. Okay, so we're going to skip over this. Social Security, 2019, the average payout was $1,400 a month. People can't live on that. This is something else that we go over every single day, is this retirement crisis we have. 31% of seniors 65 and over have $200,000 or less in their retirement account. 56% have less than $10,000. And 25% of hardworking, love this country Americans, right? Hardworking middle-class Americans, 25% of them 65 and over only have Social Security. So they've worked 40 years of their life, in some cases more, because we're working longer past the normal retirement age. 25% live on just Social Security alone, a massive retirement crisis. So what are people doing? We're working longer than we need to. We get asked this every single day. I do not have a crystal ball. I can't tell you 100% of Social Security is going to be there, but I can say, let's look at facts. This is facts. This is a quote on the Social Security right here. This link right here, Social Security's website. Last time was fully and the real overhaul was 1983. And this is the quote. They said, based on the changes that were made, that it's expected to be full and on-time basis until 2037. The trust fund is projected to become exhausted, aka bankrupt. So here's how the way I always explain this in every webinar I do. Yeah, I tell people if they're in person at a seminar, I say, raise your hand if you're a Gen X and older. Okay, good news is there's enough money to pay you. If you're in the room and you're younger than a Gen X, good luck. As it stands right now, based on this, there is not enough money. It will be exhausted and bankrupt to pay anybody. So if you're working a job and they're taking money out of your paycheck, guess what? You may want to ask some questions. I'm just saying. All right. So here's another thing we deal with every single day. You saw it on the chart, student loan debt. We have some strategies to help clients with that. 2010, in that same interview, Warren Buffett said that it was an epidemic and could be a threat to our country, right? The amount of debt we have, he specifically called out student loan debt. Look what's happened since 2010. It's an absolute epidemic. All right, we have clients here that are in their late 40s, early 50s that are paying on their kids' college funds right now, paying back those loans, not the college funds, and they're also still paying on theirs. It's an absolute epidemic. Credit card, we've seen credit card defaults, the most amount of highest balances, the most amount of defaults and late payments, the highest we've seen in 15 years right now. So how do you, one of the things we get asked about is, oh, I saw this report, I watched this show. So we go to the facts. The government says the government adjusted, not what they tell you on the little report that here, but they go back and do the government adjusted number, inflation. They're actually saying the government adjusted number is 9.7. And the Economic Policy Institute said that's a bunch of BS. It's actually 20, and you don't need an expert or a talking head or anything. Most of us can just go look at when we get home with our receipt from the grocery store to say, oh yeah, I know it's 24%, maybe even higher. So again, if these things are going up and they're going up outside of our control, and we learn from the pandemic that if we rely on just one stream of income, one source, JOB, which one of my mentors told me years ago stands for just over broke. When I was working a job, I agree with him 100%. JOB stands for just over broke. Look at how many middle-class families live paycheck to paycheck. Most middle-class families today are 90 days away from bankruptcy. So if they were to lose their income, they could not support themselves for more than 90 days. And we see it every single day. So what do you do? What do? You can be somebody who just complains about those things, or you can do something like we've done in our company. Is for free, we go out and teach and educate how to get out of that, how to get out of debt, how to plan properly for the future. People ask about recession. Yes, the textbooks, every textbook written on this there's one thing that there's a lot of things economists don't agree on. The one thing they agree on is what represents a recession. 2 consecutive quarters of negative growth, you're in a recession. So again, we've seen it, it's here. We know what's going on. And one of the things I want to share with you guys, just real quickly, I want to share this video with you because we get asked every single day, okay, yes, I've lost money in my 401k. I don't want to lose anymore. I've lost money in my mutual funds. I've lost money in my IRAs. What can we do? So here's just a quick little video we'll watch together. This is something that usually we recommend based on the analysis we do for our clients. What can you do to protect your money? Well, one of the things is you can use a fixed index annuity. What the heck is that? Let's watch the video.
Seems like retirement planning used to be a lot simpler. Your parents and grandparents generally worked for the same company for their entire careers, and then upon retiring were paid a pension, which continued to provide them an annual income every year of their retirement, no matter how long they lived. Simple, right? These days, pensions are all but extinct as the burden of retirement planning has shifted from the employers to the employees. Now that they're responsible for their own retirements, many workers are looking for ways to recreate the annual income stream that traditional pensions provided without having to worry about running out of money in retirement. For those folks, annuities are an attractive option. Annuities are an investment vehicle that generally offers safety from loss while providing the ability to grow money, which you'll annuitize at retirement. Basically turning what you've accumulated into a lifelong income stream that is guaranteed to last as long as you do. There are two types of annuities, variable and fixed. In variable annuities, your principal is invested in the market and can grow or shrink depending on what the market does. This is a riskier type of annuity, as you can lose principal if the market drops, but you do have the potential for higher upside if performance is good. In a fixed annuity, your interest rate is set and will not change despite what the market does. This is the most conservative type of annuity with the most predictable results. You're guaranteed to never lose any principal. Growth will be relatively modest. There is a special type of fixed annuity which offers the best of both worlds, the safety of a traditional fixed annuity and the upside potential of a variable annuity. A fixed index annuity, or FIA, will credit interest based on the performance of a market like a variable annuity, but establish what is known as a ceiling and a floor to minimize risk. The floor is usually around 0% and will ensure that no principal is lost if the market goes down. In return for the safety of the floor, a ceiling would also be established that would limit the gains your money could be credited in any given period. Think of an indexed annuity as building your retirement skyscraper. When conditions are good, upward progress is made. There's no limit to how high you can build, only how much you can build in any given period. When conditions are bad, your construction may pause, but you won't lose any progress either. And when conditions improve, construction resumes. In a nutshell, the most important thing isn't how big a pile of money you can create before retirement, but the assurance of knowing that you'll never outlive that pile. That peace of mind is what annuities bring to the table that other retirement vehicles don't. Most insurance companies are required by their state's Department of Insurance to verify that the annuity you choose is suitable for your age, financial situation, and retirement goals. That being said, it is important to work with a financial advisor you trust. Not all.
There you go. So that's a quick cartoon summary, quick video of what is a fixed index annuity. Again, there's many different annuities out there. We sit down with every client for free. We do what's called a financial lifestyle strategy. Usually takes us about 45 minutes to go through. We understand your goals and dreams, where you want to be, where you are today, and where you want to be in the future. And then we provide some analysis for you, some recommendations to get there. So this is an example of one of my clients. She was retired military, 25 years retired. She had her military retirement, which is called a TSP, similar to 401k. In addition to obviously being retired, I'm retired military. We also get a check a month, right? Which is actually that the monthly check we get is actually from an annuity. So she was able to roll this 300,000 over. The insurance company gave her a $24,000 vesting bonus for rolling that money over. And then in the illustration they gave us here, based on the current rates, the historical rates of these indexes we picked for her, our 300,000 would have an income basis calculation of 1.5 million in 10 years. And if she decided to retire at age 55, she'd have $60,000 a year guaranteed for life. You see this? Guaranteed. I love this. Why I love working with these products, because you can tell somebody guaranteed, right? And so if this was the basis here, she'd have $60,000 a year guaranteed. She waited till the ripe old age of 60, she'd have 67,500, and she also gets a death benefit with that. So if she passes away, the amount of money she has in use passes on to her family, and blesses that family after that. So okay, so let me click through this. Oh, so let's talk about this, because this is something that we've been watching very closely and studying. We see bankruptcies are up. As of last Friday, they're up 13.1% year over year. So when people say, oh, we're not in a recession, don't worry about it, everything's be okay. Well, all you have to do is just study the data. Don't listen to people. It's your money, it's your life, it's your future, it's your family's, your responsibility for your family. So do your research, do your due diligence, ask questions, go to multiple sources and check it out. So this was an example of 08 through 11, and we did a look back there. So it was over 5 million bankruptcies. that happened during that time frame. Mine was right here in 2010. But here's the most important thing about this is that the look back included interviewing the economic policy students interviewed thousands of people that filed bankruptcy during that time, and they found out that the difference in the household budget that started things spiraling out of control was $571 a month. If you adjust for inflation cost today, it's around $707, right? It depends on which number. We gave the benefit of the doubt of the government number instead of what the Economic Policy Institute said. But the point is that it's not a lot. It's not a lot. So today, one of the things I'm going to wrap up with is just sharing about our crusade. And I'm going to share with you so you understand why Kurt got so excited and started that he wanted to come work with us completely full-time, never go back to corporate America, because you guys that know him know he's got a heart of gold for serving people. He just loves helping people. That fills his emotional gas tank every day to be able to help people. So when he saw the ability to not only help himself and his family and his community, but to help thousands of other people, help break this cycle curse of debt, helping actually educate people the way real money works, the way the real wealth game is played, it was a game changer. So, and then he saw this. He saw that if he came and worked with us, originally started out on a part-time basis. And so I'm going to show you a couple examples. If Kurt sat down and helped the client, let's say, I'll give you an example. Let's say this was his cousin. Let's say she's a single mom with 2 kids. She's 30 years old. He sits down, he taught her the 3 ways, the 5 owns of money. He does a financial lifestyle strategy. And let's say, for example, he determines that she needs some insurance. She needs some life insurance. She goes, of course, my cousin, I need life insurance. I'm a single mom with 2 kids, but I can't afford it. So this case, Kurt calculates she needs $500,000. She's got a mortgage, some debt, these kind of things. She wants her kids to go to college if something happens to her. So Kurt says, have no fear. We have a ton of companies we work with. I was able to find you a $500,000 term policy for $50 a month. Now, if you work in our industry, if you work with our company, you get paid from the insurance company's profit, not the client. This is very, very important. If I'm a financial advisor, financial planner in the traditional sense, the traditional way things are done in advising world is that your money goes to pay me, right? Whether I make you money or not, you have to pay my fees, period. What if I told you when you work with us, all of the money we make in commissions, the Kurt makes, gets paid from the insurance company's profit? How does that work? They pay us on the annual premium. So 50 times 12 is 600. And then based on all of our agents we bring in own their own company. Every one of our agents own their own business. So they're in business for themselves, but not by themselves. We teach and educate. If Kurt was to bring 25, 50, 75, 100 agents here, we train them, not him. So we make sure that everybody's trained the same way. They have the knowledge and skills to go out and help families. Now, because of that, Kurt would get paid based on his contract level. Kurt's contract level was higher than this, but I'm going to give you an example. Let's say he was at 50% contract. So he starts out, all of our agents start out at 30%, and we have a comp plan literally that goes to 200%. So comp plan plus bonus is 200%. So Kurt's, let's say in this case, he's one of our new agents, which obviously he's not. And so he would have made $300 a commission, get paid from one of the insurance companies, and his total investment with the client is 1 to 2 hours worth of work. The client gets cheap insurance, but term we all know expires, right? So then she says, well, what else you got for me, cuz? He says, what if I can get you the same term policy? It's going to cost you a little bit more money, but now when this policy expires, you get all your money back. She goes, now you're talking. Now you're speaking my language. So same setup, $500,000, 30 years. This one's more expensive. It's $100 a month. Kurt's the agent here. So now it's 100 times 12 times his contract level. He just made $600 in 1 to 2 hours worth of work. Now, his cousin, she loves this. Obviously, we know she can afford it. We did her budget or FLS. Here's what happened. At the end of 30 years, she gets a full refund. Literally 100% of her money returned to her, but it is term and expires. And so the last piece is this one. This is the one everybody wants to know about, right? You guys saw the 3 ways money grows. I'm sure many of you thought, well, that's pretty interesting. I never heard that before. I need to check with Kurt and see how that works. And the number one funny question we get all the time is that, hey, I saw that. That looks really cool. I just have one question for you. Is it legal? Right? Of course it's legal. And there actually were 3 tax codes that were created for this particular type of strategy. Tax code 7702, 101 alpha, and 72E were created specifically for this, for investing in life insurance. Okay. So this is permanent life insurance now, can never expire. going to cost her a little bit more money, $250 a month for the same $500,000. Kurt's the agent here. How do you make out? Not too shabby. 1 to 2 hours worth of work. Now Kurt made $1,500, and his cousin loves him because this is what she wants. She wants life insurance. She wants the death benefits. She wants living benefits in case she gets sick, and she wants to build her money tax-free with no risk in the market, but taking advantage of the market gains. And so she gets that here. But we're not done, because Kurt, in addition to helping his cousin and everything he did and all the education, she's protected. She loves this product. The insurance company, every single year thereafter, is going to give him another commission. Again, from the insurance company's profit. Now, he's not getting that big commission up front like he got up front again. He's going to get an average of 4%. So that's $120. Not too shabby. He did the work one time. So imagine if you were working with us, if you were Kurt. Now, this is one policy. Obviously, Kurt's dealt with thousands of clients, and he's been able to help a lot more people than that. So imagine the difference. Imagine how much this number goes up. Okay. Now, what is his cousin are now, we call them part of our family once they become a client here with us. She gets permanent life insurance, that cash value is 0 to 9, or she can do uncapped, no limit. Tax-free growth, tax code 7702, what comes with the living benefits, long-term care, long-term disability. Not too shabby, right? All this under one umbrella, one product. Oh, by the way, just to repeat, how much did it cost a client to work with us? 0. And all of the money that grows in this product cannot be touched in bankruptcy, divorce, or being sued. Okay. So when we're doing the national interviews and we're interviewing people, I'm just going to share this with you real quick. I'm going to turn it over to Kurt. We always ask people, now that you see what we do, can you see yourself doing this? And guess what most people say? Yes. Well, what does it entail? And so there's a couple things. If you were to work with us, so this is the way you know, Kurt's been background checked. He's licensed in many, many states. So you know that if you work with us, all of our agents are background checked, and they have license in multiple states, and license in life and annuities. And some of them have some other certifications and other things like that. And so when people come work with us, this would be the cost if you started your own agency without an office. This is you working from your home. It would cost you roughly around $38,000. If you were become an agent and you had the components that we provide when you come work with us. And so at the end of the day, when I'm interviewing somebody, I ask them, if you could make a decision to come work with us today and would do this stuff for you, would it be worth it? You know, do things that matter most to you, have the additional time, the additional income, work remotely, own your own business, create amazing new relationships, learn the financial industry, and most importantly, create a legacy. And people say yes. And when they said, well, how much does it cost? How can I get started with the next step? So it was $199 if they were to come work with us. That covers their background check, gets them set up. And then the only thing they would need in addition to that is to be licensed in their state. And the licensing costs range from anywhere from $75 to $300, and depending on the state and depending on when they come join us. Right now, we actually have a promotion. If you come work with us, if you get licensed within 2 weeks, reimburse the cost to you. So, and the last piece is when we're doing the interviews, people always say, well, what kind of money can I make? Okay, so here's an example I put together over 4 years ago. You'll see there's no disclaimers at the bottom because I made the numbers ridiculous. And we sent it to our compliance team in our home office. If you work with us part-time, you talk to 2 families, you submit 2 applications for insurance. The average family puts away $250. That's $6,000 in annual premium, right? Your $3,000 times your 2 applications. I told you, Kurt, for an example I used was at 50%. I'm lowering it to 40. That's an extra $2,400 a month. Again, not too shabby. What was the difference of adjusted income for not filing bankruptcy based on today's numbers? I think it was $707 a month. And if you work with us on a part-time basis, you're making an extra $2,400. And last piece is these 2, if you come work with us and we teach you how to become a broker, become a marketing director. So you have a small agency, you got you plus 9. Look what we did to the monthly premium. I lowered it down to 100 instead of 250. Combined override for a marketing directors are 25%. That's $30,000 a month in income. And then if you're a leader and you like to help promote and other leaders, if you help people become marketing directors on your team, so help people on your team become brokers, which when I was in the real estate industry, that meant that if they train you to do that, you were going to leave and start your own agency. So they didn't want to do that. But here, we want to do that every single day and nobody leaves. And so if you become a chairman's council with us, means you help 12 marketing directors promote them, help them grow their business and be a leader to them. That's 2.3 million in income. So that's it for me. Kurt, back over to you. See if anybody has any questions.
Oh, I'm sorry, I was talking on mute. Sorry about that. Just wanted to thank Bill for sharing that message. Well, one thing, wanted to thank again everybody for hopping on here, just listening to this presentation. One thing I just want to say, even if this isn't for you, if you know anybody who may be interested, if you could send them over as referral to me, that would be fantastic. I would appreciate that because that's kind of what we do. One of the things I do is, 90% of my business comes through referrals. So, if you know somebody who may be interested in finding out more about any of these policies or finding out about an opportunity, please let me know. These positions can be extremely flexible. They can be either a full-time or a true part-time. And we say part-time, you can actually be successful in this business with as little as 5 to 10 hours a week. All trainings provided, and that's kind of what we're doing. So anyways, thank you everyone for hopping on here. One thing I want to share again, if you have not dropped your email in the chat or send it to me, please let me do. I do have a gift I want to send over everybody, but I don't think I have everybody's email on here. So if you could drop that in there, or if you've got my contact information, send it over to me, and I'll get that out this week. So anyways, that's all I'm wrapping up. Does anybody have anything they'd like to bring up? Anything they'd like to ask myself or Bill? All right. Well, then I will let you go, and we will go ahead and thank you all for hopping on here. And if anybody has any questions, you can either ask here or reach out to me. And thank you very much for your time tonight. It's been a pleasure.
Take care. Have a great night. God bless.